Hello and welcome to the Sales Scoop. This is a weekly live show for the founders and senior leaders of technology businesses who want to improve how they sell. My name's Alistair Cole. I'm a computer scientist and ex-software engineer with 2 decades experience in sales and marketing. And I'm delighted to say that joining us live today on the Sales Scoop is Mark Bernstein. Hello, Mark.
Good morning.
Hi. Thank you so much for making the time to join us today. Mark, you're a serial investment whisperer, I like to think of you as somebody who's been in and around the M&A market in the UK for a very long time with a huge amount of experience in acquisitions and investment. And our paths crossed many years ago at Green Cathedral and the Cambridge Science Park, in and around the Cambridge Science Park, and that explosion of technology. And keen to share a few stories there. But before we do, please, Mark, for anybody who doesn't know you and is watching, could you introduce yourself and tell us a little bit about your journey here today?
Yes, good afternoon, everybody. Now I think it is. I'm Mark Bernstein. I coming to the end of my career, and I guess I've learnt a fair bit from it, successes and failures. I started as an accountant, qualified with Ernst & Young in the UK, finance director of a number of listed businesses. And then I began to do my own startups, and I've done a mixture of being involved in some quite big businesses and also doing my own smaller startups. I've been involved in taking, I think, 4 businesses from startup to IPO in various guises.
Yeah.
I've been a non-exec and a chair on private companies and publicly listed boards for about 30 years. And I've also been an angel investor, and in building some of my own businesses, I've done quite a lot of acquisitions and disposals, probably about 25 of them. So have really seen a lot of these flows from both sides, both as a founder looking for funding and also an investor being approached for funding. So that's really what I've been doing for the last 35 years.
Yes, and I've heard you talk about the kind of Cambridge technology explosion. How did that come about? How did you get into the world of tech and tech business growth?
Well, this really happened when I was about 13 years old. I had some relatives who were involved in the very early Cambridge startup world. They had gone to Cambridge University. They'd built a computer the size of a room, and I was about 13. They were about 5 years older than me. And I remember having tea with them one day, and I was thinking, at the age of 13, I thought, you guys are boffins. What you need is some commercial chap to sit alongside you to help commercialize what you do. And that is essentially what I've done in my career. They went on, they were part of the sort of golden age of computer startups in Cambridge with Acorn Computers, for example.
Yeah.
And my uncle ended up building various technology businesses in and around Cambridge. And that had a very big impact on really my career in many ways. Some of those individuals, people like Hauser, became mentors of mine when I was young doing my first startups. But also, there's an ethos around Cambridge startups, which I think is quite interesting in that whole high-tech world, which is about trying to make the world a better place. And it's not all about making money. It's about doing good and making money. And I don't know whether that resonates with you.
It does totally. I mean, I people often scoff at that, but I genuinely, felt that in Cambridge. I feel that now in the kind of London startup scene as well. But yeah, actually, the Acorn is a link between us because my mother bought 2 Acorn Archimedes. She was a teacher in home counties, and she'd seen that, and she bought these two. I think there were some vouchers available, and my brother and I climbed into these machines, and that was it. We ended up both reading AI and computer science many years later. But yeah, I do think there's a tech for good, a force for good, and certainly that's played out by what I see happening now in and around the Cambridge scene with the kind of Cambridge 1%, and that ethos continues. Yeah, that's really interesting. I mean, maybe you've answered this question, but I wondered whether you'd been tempted to leave accounting when you met these boffins and move into development yourself. But it sounds like there are probably enough programmers in your family and in your network.
I'm not. I don't think my brain's good enough to program. I'm just a lowly sort of commercial chap, really.
Yeah.
But yeah, I was always interested in technology and the commercial application. So I've been very lucky in my career to do some fairly early stage stuff. So we floated the world's second virtual reality business in 1992. Look how long it's taken to get into the mainstream. One of the UK's first internet startups. We did one of the first UK credit card transactions on the internet in 1994. And then I've done computer games and social networks and so on.
Yes. And given, we worked together in Green Cathedral, almost 20 years ago, and, you've helped two unicorns, going to grow, why, I'm sure you should have retired to your private island now, right? Why are you back in with Diligencia? What drove you to make that decision to keep going and
two or three things. Firstly, I love doing this stuff, and I think, all of us, and for those of you listening who are listening to this, if you're in a smaller company rather than a large corporate, you're probably there because you're trying to prove that you can achieve something, you can build something, that you can do something that perhaps nobody's done before. So it's about pushing the envelope. It's not just about making money. Otherwise, most of us probably wouldn't be here. So I'm always interested in having an idea and seeing whether I can make it work. That's number one. Number two, I love working with younger people, and I sort of do believe that as you get older, if you carry on working with younger people, it helps you stay young yourself. And Diligencia, which is my latest startup, having spent all these years on both sides of the fence, as I previously explained, I came to the conclusion that at the bottom end of the market, the investment process is full of process friction. It's inefficient for everybody involved. It's inefficient for companies looking for funding. If you're listening and you're doing a startup, you're looking for funding, you're probably spending at least 50% of your time looking for funding rather than building your business. Most people then spray and pray their decks to VC websites, where because of what VCs that we're working with, they have probably 1% or less chance of getting funded your application. So it's not a great use of your time. And then from the investor's perspective, they're deluged with applications. Many of the companies that they are looking at, they've got no real way of knowing whether those companies are investment ready or not. And the deal sizes are too small. So as a result, they can't do proper diligence because the numbers don't justify the costs of doing really good diligence. And even if they were prepared to spend the money, they can't do the diligence because often the applicant company's data and files and information is not in a structure where they can actually be diligenced. And as a result, investors make investments, and most investors lose most of their money on most of their deals, which is a very inefficient capital allocation. So I thought, well, why not put a platform in place where we can help companies get investment ready, self-diligence, know that they're ready for investment, and they can offer we can offer a qualified diligence company to the investor, and
Yeah.
we can offer a bunch of tools to investors. So that's what we're building.
Yeah.
We'll see whether it works. Some of the things I've done in my career have worked, some of them haven't. We'll
Yeah.
find out with this one.
Yeah. And so if I was a small business owner or a senior leader at a startup listening in, how much would it cost for them to go and do, pay the service provider, professional services company to go and do due diligence? How much does it cost?
Well, I, we work with a number of people. One of them is paid 25,000
Right.
for Series A.
Yeah.
They charge around 25,000, which is put onto the company.
Yeah.
That's quite a lot of money.
Yeah.
Clearly, it can be done for much less. I mean, I think the costs have come down.
Mm.
Certainly, maybe 15 years ago, the costs were around 50,000. It was all manual, but now we can automate more and more.
Yeah. And out there in the, kind of in an investment space at the moment, right? How does it look? How does it feel right now in 2025? You're right in the coal face. How does it feel to you?
I think the UK is a great place to build these businesses. I think the tax
Mm.
system with EIS, SEIS is as favourable as it needs to be. Um, I think it's still tough elbowing your way through to get noticed.
Yeah.
Um, and it is, I still think it's a very inefficient process generally. There's quite a lot of luck involved as to whether or not you get
Yeah.
funded.
Yeah, and the time I think is really interesting because obviously with smaller outfits and startups, they probably can't last as long, right? It's all about, can they find the investment quick enough? Can they go through the due diligence quick enough? And then can they actually land the money? I mean, what kind of timings are we looking like doing it kind of traditionally, or with advanced tools like Diligencia? What's the difference?
Well, I think things have changed actually quite a lot even in the last decade, and now there are a lot of funds which will do. The concept of pre-seed has come in, where you can raise a relatively small sum of money relatively quickly. Some of these funds will fund you. They'll give you a term sheet in 3 or 4 weeks. They'll fund you in 6 weeks.
Okay.
Uh, that's pretty quick.
Yeah.
Um, and I think there's a lot of money actually washing around.
Okay.
Uh, how can utilizing a platform like Diligencia help, so you can actually deliver a package to the investor? Well, you're really doing two things. You're increasing your attractiveness to the investor off the bat, because if you come and say, I have self-diligenced and here's my pack, so I don't think I've got many problems that you're going to uncover in your diligence, or we've noticed there are a couple of things we've got to sort out, but we're telling you about them up front. As an
Yeah.
investor, that gives me quite a lot of confidence that I'm not going to waste a lot of time working with you, figuring out whether you are the opportunity is a good opportunity, and then find at the end of the process that you don't own your own IP, or there's a dispute between the founders, because that's what tends to
Yeah.
happen.
Yeah, and we know from helping businesses down that funding road that it does take a long time before you get to the kind of the pebbles under which the challenges lie. So how does Diligencia accelerate that, and how can AI
Well,
and
so
technology accelerate
how
that?
can AI? So we split diligence into two halves, and maybe if those listening can think of a pyramid, at the bottom of the pyramid there's a base layer which we call the foundation layer, and that's about documents. That's about data room. It's about business audit, directors' questionnaires, warranty disclosures. So that's about getting all your documents sorted out and uncovering any issues that you might have. Then the next layer we call value diligence, and that's about understanding the market opportunity, route to market, competition, technology differentiation. Um, and that sort of diligence used to cost a fortune. For each one of those reports, you might well pay £4,000 or £5,000 to a specialist company, and they would take maybe 3 or 4 weeks. Now, at the, we can deliver that in minutes. Now, if that first specialist company for the £4,000 or £5,000, let's say they do get a 10 out of 10 result, we can probably, with our AI, deliver a 6 out of 10 result in minutes. But what it enables you to do is see your business as others see you. And that's really very useful, because if the AI is telling you your market opportunity isn't that great because you've got an opportunity to remediate. So I think AI can, well, we already see AI can help in so many ways.
Yes. Yeah, brilliant. Okay, thank you. I want to come back to due diligence in a little bit. But in terms of making businesses attractive to investors, from your considerable experience, what are the kind of behaviours and the kind of attributes that startup founders and scale up founders, what should they be doing to make their business as attractive as possible?
I think firstly, you've got to be able to explain your idea to your granny.
Okay. Yeah.
If you can't do it, explain it really simply to start with, it's probably going to be difficult to get people's attention. So think about how you explain your business to your granny, because it's almost certainly different to how you explain it to your colleagues.
Yeah.
But that's the first thing. I think secondly, team, particularly with earlier stage businesses, it changes as you go through to Series A, Series B, and so on. But to start with, you're backing the people and an idea.
Yeah.
So it's almost certain that you're going to pivot to some extent. It's not often that you do a startup and your product market fit is right. Normally, it's a bit of a chicken and egg, and you hone your business. So as an investor, you're looking for people who can adapt, who can recognize that when they're playing a losing game, that they can pivot and do it fairly nimbly. So the people element is really important. The third element is, I think, big market. It's much easier to be successful if you're going to have a tiny piece of a large market than if you're going to have a large piece of a small niche.
Okay, that really helps. I love the granny. There was a UX tester maybe 15 years ago, and he offered a service where he would have his grandmother, his real grandmother, like user test your website, and it was genius, right? Because it didn't work for her. So product market fit, obviously that's critical. Everybody has a different kind of view of it in their head. From your point of view as a CFO, right? What and an investment whisperer, what are you looking for, or what informs you that there is proper product market fit?
Customers. And it's really difficult. It's really difficult, but the answer is customers, and then paying customers. The other frustrating thing for anybody listening who's doing this for the first time, you need to think of a ladder. Whenever you speak to your investor, it doesn't matter what step of the ladder you're on.
Yeah,
it's always the next one that people are interested in. So it's, do you have a prototype? Yes. Do you have a product? Yes. Do you have revenues? Or do you have customers? Yes. Are they paying you? Yes. Oh, are they profitable customers?
yeah.
Yes. Is your churn low? Are you retaining those customers? And so whatever stage you're at, you're always made to feel a little bit inadequate, because people are always interested in the next stage.
Sure. And are those, how much of that kind of landscape does Diligencia cover? Does it give feedback on some of that, all of that?
We do a little bit. We do a little bit, and we can do more. Our focus right now is if you come back to that idea of the pyramid with the foundational diligence, then the value diligence, at the top of that pyramid is the human, the investor, and the advisor, where they are doing the really difficult assessment of, is this really a great opportunity? Is there product market fit?
Yeah.
it's for sure, and the AI and so on will get better at it. But at the moment, the AI
Yes.
hallucinates a lot, and
Sure.
so
Yeah.
what we're trying to do is do stuff at the bottom of the pyramid, the boring stuff at the bottom of the pyramid, to allow the investor and the company to focus on the real identification of value drivers at the top of the pyramid.
Yeah. So are you getting a lot of interest from investors then? Because I can imagine if I was an investor, that diligencia would be, incredibly helpful for me, either with active, engagements that I'm talking about, or future ones.
Well, we're early stage ourselves. We're still doing product market fit ourselves,
Yeah.
despite all my experience. I don't want to suggest I know everything.
Yeah.
We've recently signed up about 40 VCs
Okay.
and angel networks, and we're
Okay.
now learning about exactly what they want, how they want stuff to be delivered to them.
Yeah. Yeah.
Um, but
Okay.
I think this is also with AI the start of another phase.
Mm.
I mean, I'm afraid I can go back 30 years ago to bank managers.
Yeah.
And 30 years ago, if you wanted a bank loan, a personal loan, you went into your bank
Yeah.
you shined your shoes, and the bank manager made a decision based on you. And then computers came along and computer-based lending, and the bank managers said it'll never catch on because it's all about personal relationships and my judgment.
Yeah.
30 years later, those people don't exist anymore, and all the lending is data driven
Yeah.
and so on. My second example is football managers. 30 years ago, 20 years ago, you used
Yeah.
to have people like Redknapp making decisions on whether he
Yeah.
fancied a centre forward and splurging 10 million quid on him. Now the manager doesn't really make those decisions because
No.
the data analysis department. And I think at the bottom end of this investment market, we are going to increasingly find data driven
Yeah.
decisions where if you raise a fund of 50 million quid, the computer is going to determine how that
Yeah.
50 million quid
Yeah.
is allocated, and it's not going to be left to a bunch of investment managers sort of backing hunches. I don't know what you think.
Yeah. No, no, absolutely. That data-led approach is perfect, like you say, for the bottom of the funnel, in investment, but across the board, right? Those low-level jobs that actually are going to be done better just with some data. You still going to need humans involved.
Yeah,
And talking about the humans, I thought you picking out people as a really important part of success, I think is massive. Those who are able to realize that it's not going in the right direction and pivot. And I wanted to ask those investment rounds that you've seen or been involved in, when it's not worked, is that how has what's the ratio of where that's been a kind of people problem versus a technology or product problem?
uh, for me, normally it's product market fit
Okay.
that hasn't gone right.
Right.
Um, but the other real, and I've had some failures in my career, and the interesting thing about the failures is they tended to fail for a problem that you
Mm.
identified right at the beginning,
Yeah.
which you didn't want to face up to. And you sort of hedged it and you thought you'd sort it all out. And when you've finished, when the business is finished and you look back
Mm.
with all that sweat and effort, if you're true to yourself, you go, I sort of had an inkling that the reason this business has failed is because of something that I was gnawing away at me at the beginning, but I
Yeah.
want to address. I don't know whether that resonates with anybody.
Well, it certainly resonates with me. I think we turn a blind eye, don't we? And it happens early on, and then psychologically we kind of hoodwink ourselves, like, well, I've kind of passed that now. I've dealt with it, but it wasn't dealt with because you didn't really shine a light on it. So and I think the truth is, to a certain degree, we all kind of get what we deserve, and our biggest problems are of our own making, and it's when we don't look in. And I guess that's another thing that Diligencia, I would imagine, will solve, which is there are things that I don't know, I needed to know, or areas it's going to shine a light into corners that I hadn't even realized were there, never mind looked in.
But you know, I'm still learning. You asked me right at the beginning, why am I still doing it? I'm still learning. I've come across in our own business another company that's been helping us doing customer insights, and that's been fascinating. And their advice is don't start coding and building your product on day one. Spend time just talking to people. And they gave me the example of Bolt, which is a sort of Uber competitor. And the founder of Bolt, who comes, I think, from Lithuania or somewhere, he spent the first year of the business simply riding in taxis and talking to the taxi drivers. To really understand the pain points of alternative solutions and so on. And once he'd really understood the pain points, he then started building his product. And that's a big lesson.
Yeah, it's massive, isn't it? You know, market orientation, spending time with potential customers, and buyers. You know, spending time with the people whose money is going to leave their pocket and come into your pocket is a really big deal. How long should you expect people to be working on their idea or their startup before they should be making a decision about, is it going to be successful or not? Some people go on for decades, right, flogging the same horse. What, in your experience, what's a good cutoff point?
Well, this is my first. I don't know the answer on this podcast. There are two schools of thought. One is you do an MVP and you do it quickly and you learn and you adapt. And depending on who you're aiming your product at, maybe that will work. In the B2B space, my experience, and that's certainly the perceived wisdom, everybody seems to think you should do an MVP in 3 months and then adapt. My experience is if you go and talk to, particularly if you're trying to do a B2B sale, if you go and talk to people before you've got a product that looks anything like broad and deep enough for an enterprise to take on, that's tough. And they tend to turn around and go, well, it's come back when it's ready. So, and so what we've done I've done both. With Diligencia, we've actually spent 3 years building it. And so we've now got a very broad, very deep platform. That we're not so worried about competition. Because I want to compare that to, for example, pitch deck analyzers. There are hundreds of companies offering pitch deck analyzers. Well, you can create a pitch deck analyzer in 5 minutes now on AI. And so if you had produced an MVP 6-9 months ago of a pitch deck analyzer, you trawled it round, you might have got a bit of initial traction, but actually other people can come along and just replicate it. So I guess I don't completely know the answer, but I don't think it's quite as simple as always produce an MVP and then take it from there.
But I kind of feel like with technology, it's almost like there's a 2-track approach where you've got your kind of 12 or 24 month goals and you're beavering towards that, right? And you're resolutely moving there and making those kind of rapid spikes or MVPs in order to test stuff. But if you went with the prevailing wind, you'd be changing left, right, and center every 2 months because of what's happening. So that 2-track is a way to mitigate that. You've talked a lot about Diligencia, which is fantastic. If anybody wants to get more information about it, they can at diligencia.co.uk, or they can track you down on LinkedIn. And actually, I wanted to say that one of our new 100-day transformation packages is a Series A readiness package that we offer, but we don't have a due diligence component to that. And maybe that's something we should be investigating, Mark, that we're able to provide that as a package, right?
And vice versa. In the end, we don't just want to be doing the boring stuff. We want to be helping people sell more, because that's what
Yeah.
counts in the end.
Yeah, that's another way to, as a, revenue, essential indicator of an attractive business for investors. If anybody listening or watching would like to see some of the other guests and masterclasses we've got, you can head over to thesalescoop.com. Our next show is Isabel Bathurst, who's created Inertia in Legal AI. I mean, fascinating talking to her, Mark, about the barriers of going, even though it felt like it was the right thing for Isabel, going and taking a new product and convincing law firms that this is the way forward, given their tradition. I'm looking forward to speaking to her. But thank you so much, Mark, for your time today on how to stack the investment deck in the favor of startups.
Well, Ben, thank you very much for having me on, and thank everybody listening for listening. I hope you found it reasonably interesting.
Well, I have. There's some absolute gems there, Mark. Loads. I mean, I love the pyramid analogy, and I think it's really good to hear you talk positively about the market, because a lot of people talk negatively, and I think I'm not as close to the kind of raw numbers and the finance in the market as you are, but certainly to go back to how we started the show, like I feel that you've got to stay positive. There's an opportunity to improve life for people, but certainly for businesses through technology. If we're positive about it, and I think the Diligencia platform and your approach is opening up, due diligence at a crazily lower price point, and hopefully enabling founders to sell their businesses and buy their private islands.
Thank you very much indeed.
Thanks for your time, Mark. Bye.
Bye.